Hello traders, Gary Wagner here at just about 1 o'clock in Honolulu, 7 o'clock in New York. It is Monday, May 11th, 2020, and this is the Daily Report for Gold and Silver. U.S. dollar strength was one of the precursors to lower gold pricing, which sold off to the tune of about $17 today. That did stop us out, and we will report all of the findings under market forecast and proper action. But one thing we must realize, even with this cluster of losses, and that is if you collectively add them together, they come nowhere near the profits that we have made so far this year. Trading is a zero-sum game. You are going to win some and you are going to lose some. The key to effective trading is to make more money on the profitable trades than you lose on the losing trades. That being said, we will show all the details on the members page. On today's show, I want to cover three distinct metals: gold, silver, and palladium, and also announce a new addition to the gold forecast, which is a daily Bitcoin report. But first, let's take a look at current pricing. Traders, while I was expecting gold to rise a little bit, which it did in overseas trading last night, once it hit New York, it came under pressure with the aid of a strong U.S. dollar. Gold is at $1,700.20, net decline of $3.70, 0.8%, and it did affect our trade. We will talk about that in detail when we pull up our technical studies. When we look at spot gold, $1,697.70, down $2.90. Platinum also declined by $8 on the day, $781.30, and the lone star was palladium, up $33.80 at $1854.90, and silver also lost on the day, about 7 cents at $15.70, and as you can see, that was all in light of a strong U.S. dollar, well back over 100 at 100.225. Let's take a look at our technical studies. Traders, I am actually surprised that we did not see a breakout breaking either above or below the compression triangle. You can see that we are right at the apex here. On Friday, though, we solidly broke above it, but then closed back into that area. And today, as you can see, the entire real body of this candle falls within the triangle itself. And that tells me that we could still have some sort of a break imminent. Nonetheless, we certainly did not see that today. On a short-term basis, as indicated by this 50-day moving average, the bulls still have the upper hand. This is still a bullish market. However, we did close below the 21-day moving average, which resides right here at approximately 1699. Now, that being said, what levels of resistance and support should we be looking for? Well, the first primary area that we need to focus upon is very near current pricing. It is the 0.236% retracement at 1710. And as you can see, gold is trading slightly below that. In terms of support, short-term support comes in at approximately 1681. That is the 50% retracement. Below that is 1662, the 38% retracement. And why I am looking at that with some seriousness, if we continue to see gold trade under pressure, is that we have what's called a true harmonics. In other words, I have two different data sets. The first data set that we are looking at starts at this low here, which comes in at 1575 up to 1788. And then we have another data set which encompasses much more area. And as you can see, when we compress it, we get the bottom here at 1457 up to this top at 1788. So these are the two different sets. And whenever you have different data sets and you get a confluence, meaning an agreement of price, which we are getting right in here, it tells me it's pretty important. And traders, lately it has been dollar strength that has been curtailing any kind of strong upside move in gold. The one thing that we can see is when we look at the most recent range, we do have minor resistance at 100.257. We have support at 97. What fascinates me is that even on a weekly chart, look at the dynamics of the range that we have seen over the last, say, couple of months, especially a month ago when we had these highs at 103 and a low that came in at approximately 95. And traders, I did want to take a look at silver today because it has been in a narrowing range also. When we look at various support and resistance levels, they come in rather quickly. I would have to say 1450, that is an area of minor support, and then 1400 to 1390, that would be major support. Now, resistance is quite interesting because you have your 21-day exponential moving average, and you can see how that kind of follows these tops around. We are certainly below the 50-day moving average, and what that tells me is that we are truly not in a short-term bullish trend. We could be in a long-term bullish trend, but certainly not a short-term, and that is why I've been kind of staying away from silver. I would be a buyer on a break above these moving averages. Traders, this is the opening screen to our daily members report. This, of course, is from Friday. If you want to take a look at Joseph's Bitcoin article on a daily basis, what you want to look for is the upper right-hand side of the screen. You can see these two gold buttons. One says gold, one says Bitcoin. All you have to do is simply click the Bitcoin, and it will give you a listing of his blog today. He also does include a very nice chart gallery, gives commentary on that, and you can go through all previous reports to see what he has been saying and how that has panned out. And traders, lastly, I do want to take a look at Palladium. Palladium is a very difficult market to trade because of the volume. It is very, very thin. We are looking at a weekly chart with Elliott wave count as well as a 50 simple moving average and a 21-day exponential. When we look at it and look at the wave count that has been generated, we get our third wave that comes to about 1200. We get a really nice retracement that comes down to about 800. And then look at this extended fifth wave going from approximately 1800 all the way up to its highest value ever at 2800, a $2,000 move. Now, from there, it really fell from grace down to about 1400. But what that means to me is that what we're looking at is certainly a market that is under pressure. It has recovered slightly, coming back to 22, but now settling around 1800. My sense is that we will see some sort of an A, B, C correction. And traders, lastly, I do want to draw a projection. This is an Elliott wave-based projection. This was in a downtrend, and because of that, you had a bearish count. So you went really from 4 up to 5, and then again to 1, 2, 3 going below, and then a fourth. And that means we are in a final fifth wave. The GET system itself is looking for the potential for palladium to go to approximately $1,200 an ounce. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.